Hello traders, Gary Wagner here just after 10 o'clock in Honolulu, 4 o'clock in New York on Tuesday, the 21st day of October, 2014, and this is the daily report for gold and silver. Although well off of the highs this morning, we do have gold trading higher on the day, up roughly about $2, $12.48 and change. Now that is near the low of $12.4620, the high $12.5490. It's that high that's important. We'll talk about that in a second. And as I said, current print on the screen, $12.4822. Silver also trading higher this morning, trading up about 9 cents on the day, $17.50. That's what we see on the screen. Now that's off of a low of $17.28 and a high of $17.86. More on silver in a little bit. Traders, as I said, we are currently trading up on the day, although we're closer to the lows than the high. And I draw your attention to the chart I currently have up on the screen. It is a 720-minute chart. We've been looking at this over the last couple of days, really to look at critical levels of support as well as resistance and different benchmarks, different strategies. Now, we currently have our stop trading just below here. This is 1235. I believe I said to put it below 1230. But what I am probably going to suggest, because we're in at around 44, is I want to somehow protect our equity, and that would probably put a stop in at around 41. However, it's a little close right now, seeing as the market is trading at 48. However, this is the reason for my sense of not so much urgency, but to be prepared for any contingencies that happen. And the fact of the matter is, this 50% retracement, and this retracement here is 1322 to 1180. You can see I've got two of them. This one starts higher, but this one right here is this hash marks right in here, and the 50% is 1252. We had a high today at 1254, but we absolutely, you can see it right here, definitively have found some sort of resistance coming in the market right in this area. Now, why is that something I want to be cautious about? Well, typically in terms of Elliott wave and Fibonacci retracements, after a defined correction, that's this move here, we'll typically get a counter wave that's anywhere between 50 and 75% of the move down. So it really gives us what I like to call a sweet zone or a target zone. And that target zone is right in here. So the target zone that we're looking at is the zone, let me change colors here, is this zone right here. And this is our exit strategy, is going to be to get out somewhere in this particular target zone, because typically you'll have the market move between 50 and 75% of that move. However, in this case, we've seen some real resistance come in the market, and to me, it's really critical that we're able to start trading above this and actually close above this price point, meaning 52. That's the point that I'm looking at. A failure to do that could really signal some weakness coming in the market. And the reason that I'm looking at that as something we want to be cautious about is what we've witnessed in the stock market. Now, I talk about it in the opening letter, and that is the fact that the equities markets are moving again, but gold prices and equity prices are running in tandem. When I say in tandem, it's that they're both moving higher. It's not the relationship between the two, but we've had an inverse correlation. We've had a strong dollar, strong equities, weak gold. Now we are getting a strong equities and strong gold at the same time. So we want to see if that continues. But take a look at this. This is the Standard & Poor's. This is the E-mini. One of the reasons that we're looking at that is starting at the beginning of next year, in conjunction with the gold forecast, I'm going to offer a new service, which will be for those that want to trade the E-minis or Standard & Poor's 500 contracts. We'll be trading those coming next year. But if you look at this particular chart here, we put a couple of channel lines in to really represent the band that it had been trading in, and then the upper level band. And we certainly broke through this lower band, coming down to about 1820 right there, but you can see it's moved right back in. So when we look at the retracement that we've seen recently, we're starting to gain back a lot of ground. When you consider that it's come off of this low at 1820, it's already up over 100 points at 1938. So the one market that really has been in a scenario in which it has defined both the gold market as well as the equity has been the dollar. You can see that the dollar is lower today, or it's just updating right now. Excuse me, it is higher today. It was lower yesterday. So we've got a higher dollar, higher equities, and higher gold, all running at the same time. I think that that's one of the reasons right now that we're seeing a little bit of weakness coming into gold as it trades off of those highs. And then lastly, another reason for some real concern here is I talked about the fact over the last few days, if we take this long-standing support, I now believe that's going to become resistance. And as you can see, we've quickly made a play up near the upper levels of that. So I want to be real cautious in here as we look at this long gold position. We've only got a couple of dollars there, but most importantly, I want to protect ourselves because my sense is that if the dollar continues to steamroll up, if equities start moving back into those high registers, we could see some continued pressure come into the precious metals markets. So as far as silver goes, it is trading higher today. And I did note some support at 1720. But if we do see some weakness come into the gold market, I think we'll see some follow through come into silver. So I am recommending that we still maintain our long position in gold. We are looking to move the stop up tighter. That's essential. And to be sidelined in silver. This has been Gary Wagner wishing you, as always, good trading. Have a great day. We'll talk to you tomorrow for another daily update and review. Bye-bye.